Nextracker stock is up about 16% after they have announced their recent quarter earnings. They're currently trading at about $46. So is it a buy at $46? That's what I'm going to cover in this video. In full disclosure, I did make a video on Nextracker a month ago when it was trading at about $38, and I took a small position in Nextracker, so I do own Nextracker. Also, this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Nextracker. Let's look at the earnings results. They did beat both the revenue target as well as the earnings per share estimate as shown on the screen. The beat was 9.9% for the revenue and 75% for EPS. And that's a very impressive beat, and that's why the stock is up significantly. With respect to the outlook for financial year of 2025, they raised it with respect to the GAAP net income. As you can see on the screen, the revenue, they're still expecting between $2.8 to $2.9 billion, but the GAAP net income now is expected between $467 to $497 million. Previously, it was $378 to $408 million. So that also contributed to the rise of the stock. Overall, the positives are record backlog that exceeds $4.5 billion. Gross margin improved to 35.5% from 29.5% year over year. That's very impressive, almost 6% increase. The manufacturing capacity expanded to 50 gigawatt per year. The operating cash flow is $418 million year to date. And they also raised the financial year 2025 profit outlook. The negatives are financial year 2025 Q3 revenue decreased to $679 million from $710 million year over year. GAAP net income declined to $117 million for $128 million year over year. GAAP EPS decreased to 0.79 from 0.87 year over year. So overall, it's net positive. So is $46 a buy price? To determine that, we have to look into the valuations. As you can see on the screen, I have shown the valuation for reasonable assumptions and great execution. This is the same valuation that I have shown in the video that I did a month ago, but I have updated the current stock price. So based on the current stock price of $46.25, the 5-year gain is 57% in the reasonable assumptions case and 158% in the great execution case. For my personal journey, I take a decision based on the reasonable assumptions case, in which I'm looking at 57%. When I bought this stock at $38, based on $73 of price target, the gain was 90% plus. So that attracted me to the stock because I'm looking at 90%, almost a double in 5 years. But now I'm not getting that. I'm barely getting 57%. So I'm not a buyer of Nextracker at this current price. Also, this year we may be expecting only one rate cut, which is not good for the industry that Nextracker operates in. Therefore, I'm not in a hurry to add to my position. I'm going to watch Nextracker's earnings carefully in the coming quarters and make a decision on whether to add to my position or not. Let me know your thoughts in the comments. Thank you so much for watching.